Let's now check on the markets. The Nigerian market, of course, has been sliding recently, and today we did see the market fall back significantly, down about 1.35%, closing at 36,464 points. We did see some gainers, however. Maybaker, UAC Properties, and Neimeth were some of the few gainers on the day, but Unilever, one of the heavyweights on the market, fell back significantly. We also saw losses in share prices of Ashaka Cement and FBN Holding, of course, the holding company for Nigeria's first bank. Let's now cross to the Nigerian Stock Exchange, where Sam Ine, a stockbroker at TFL Securities and Investments, is standing by to talk us through the market. Thank you so much, Sam, for joining us. So a pretty bad day for the market.
Thank you for having me.
We got the sense that the market was stabilizing a little bit, but then, of course, as we can see from the data today, it has fallen back significantly. And I keep talking about some of those overvalued stocks, the likes of Unilever falling back almost 8% today. Your thoughts on the market performance today?
Basically, the fallback we have experienced in the course of the week is actually expected. If you look at it from the perspective that the Nigerian stock market is a member of the global market, and in the course of the week, the Federal Open Market Committee of the United States Federal Reserve System did announce through Ben Bernanke, the chairman, that they will be scaling back the bond buying program in the course of the year. We recall that this program is injecting funds into the market. It's 85 billion a month buying program, and if this happens, we expect that the market will actually retrace a little, and that happened in the United States stock market to Asia to Europe. So we are not really going to be excluded from this. So this is expected. And if you also look at our all-share index, it's gotten to like 40, and if you apply the technical indicator, the relative strength index, that actually shows that our all-share index was actually overvalued. I mean, was actually in the overbought area at that 40,000 mark. So it's expected that we should have a little correction, and this has just been the inroad that the market has used to correct itself. So with this correction, it gives renewed confidence for the market, and we expect that there's going to be upswing in the weeks ahead, particularly as we enter the earnings season come July.
All right, so events overseas impacting our markets here. But then again, as the market falls back, one gets a sense that some people may panic. I keep talking about the fact that some stocks are looking overvalued, and I think some people may begin to pay more attention to that. Do you think that there's a risk that this could be a trigger of a further slide going forward?
Not really. I don't think this is going to cause a serious problem in the economy. If you look at our economic indices, our economy is
No, I'm referring to the market now, not necessarily the economy. The fact that we could see, I mean, the likes of Unilever, Nestle Nigeria, Nigerian breweries, a lot of people saying those stocks are very richly priced right now. So do you think that this could just be the trigger for them to correct to...
Oh, exactly. Yeah. I think this will just be the inroad for those stocks to experience some correction so that they could be fairly priced. Basically, we know that the market could over-adjust or under-adjust to market development. So what we have experienced is that those stocks in the course of the upbeat rally were actually over-adjusting to market fundamentals. So now we expect it to adjust downward and probably oscillate around its fair value. I think this is just very good for the whole market, that its inbuilt mechanism of correcting itself is actually at work.
All right, so the market closing the week on a pretty negative note. What are your expectations for next week, and what are the opportunities that you think are opening up as this market continues to slide, if it continues to slide, of course?
Okay, basically, we'll take you from the economy. The economy is robust. The Naira exchange rate is stable. The exchange reserve is robust enough to defend the value of the Naira. The inflation rate is stable. And the first quarter results from the big weights in the market were very good. We expect that, all things being equal, that as we enter the second quarter earning season, and as a result begins to come into the market, that will help the market be on the upbeat. But between now and when that begins to happen, I expect that the market will experience a short-term rally, because some stocks with this rally have been undervalued. If we look at First Bank, for instance, the support price is about 18 naira. For Oando, it's 13 naira, and Ashaka is about 24. Today, they've all broken their support, and I think people might want to come in, take advantage of these attractive prices, and if they do, we might experience a rally, and I think that will be a short-term rally. Now, after the short-term rally, I expect the market to trade sideways, because there will be no serious fundamentals to cause a serious upbeat until this half-year result begins to enter into the market. So from this perspective,
as soon as the next 3 or 4 weeks, particularly for the banks.
Yeah. So for next week, I expect the market to be a bit stable, and once the result begins to come in, it will probably pick up. That's my expectation.